Good morning, ladies and gentlemen, and welcome to the Westminster Group AGM. This is an introduction for the attendees on the Investor Meet Company platform. Attendees will be in listen-only mode. Questions can be submitted via the Q&A tab situated on the right-hand corner of your screens and will be addressed after the formal proceedings of the meeting. We will endeavour to answer all questions today. However, failing that, the company will review all questions submitted and publish responses where appropriate. These will be available via your Investor Meet Company dashboard. Finally, we would like to remind you that this presentation is being recorded. Your feedback is very important to the company, so immediately after the presentation has ended, you will be redirected for the opportunity to provide feedback. I would now like to hand you over to Chairman Sir Tony Baldry, Chief Executive Peter Fowler, and Chief Financial Officer Mark Hughes. Tony.
Thank you. So welcome everyone. I'd like to welcome you to the annual general meeting of the Westminster Group. As you've heard, I am Sir Tony Baldry, the Executive Chairman of the company. It's now well past 11 a.m. There are at least two shareholders present, so I declare the meeting open and declare the meeting to be quorate. So I think, as we all know, the Prime Minister made an announcement on the 14th of June that the COVID-19 restrictions aren't going to be lifted until the 20th, as originally expected, but extended to the 19th of July. As a consequence, we've had to make certain changes to the arrangements for this AGM. In particular, PKF, our host, advised us that the maximum permitted number of people they would allow to attend the AGM in person will be limited to no more than 10. So in order to maximise the opportunity for some shareholders who can and do wish to attend the meeting, the board limited its own attendance originally to 3, with only our registrars present from our advisors, which left space for up to 7 shareholders to attend. In the event, we had requests from 4 shareholders to register to attend in person, and accordingly we've increased our board attendance to 4. The board recognises the importance of shareholders' engagement and is conscious that in the light of the COVID-19 restrictions, the company's recent general meetings have had to be held with only the minimum number of shareholders in attendance to meet the minimum quorum requirements for those meetings. So in order to give all shareholders a chance to hear today's meeting, proceedings and the responses to questions submitted prior to the meeting, the company has provided access to this AGM through the Investor Meet Company platform. Now, I'm aware that at least 97 others have registered to participate online, making this potentially the largest audience for an AGM we've ever had. And while shareholders are able to participate in the AGM, it is important to note that shareholders are unfortunately not entitled to vote through the platform. Before turning to the formal part of the meeting, I'd like to mention the usual few housekeeping points for those present in the room. Please do keep your mobile phone switched off or on silent mode. We're not expecting a fire alarm practice. So if the fire alarm sounds, please proceed in an orderly manner to the fire exits, which are through the door we came in. If and when you wish to speak, please wait my acknowledgement and please state your name and state whether you're a shareholder, proxy or corporate representative before proceeding to speak. And in order that those attendees on the Investor Meet Company platform can hear any questions, I will repeat them. Joining me in the room today on my immediate right is Peter Fowler, our Chief Executive Officer, and then sitting to Peter's right is Stuart Fowler, our Chief Operating Officer, and Roger Worrell on my left, our Company Secretary. Also joining us from what I think we've now seen as his cell in the COVID hotel, serving quarantine sentence for travelling to the DRC, is Mark Hughes, our Chief Financial Officer. It may be helpful and convenient to everyone if I just go through the membership of board committees. The audit committee has been chaired by Charles Catania and comprises Charles Mowley, Ababio, Patsy Baker and Roger Worrell, serves as secretary. Indeed, Roger serves as secretary to all the board committees. The Remuneration Committee is chaired by Mauli Ababio and comprises Patsy Baker and Charles Cattaneo. The Risk Committee, which reports the Audit Committee, is chaired by Peter Fowler and comprises Stuart Fowler, Mark Hughes, Joanna Fowler, Hamish Russell, and again has Roger as secretary. The Nominations Committee is chaired by Patsy Baker and comprises Mauli Abayo, Charles Cattaneo, Peter Fowler. And the Disclosures Committee is chaired by Patsy Baker and comprises Charles Cattaneo, Mauli Abayo, and Peter Fowler and Mark Hughes. Our auditors and advisors, and unfortunately, most of them can't be with us today, but we're fortunate we have Mark Ray of the Link Group, the company's registers, and those who can't be with us today, but for whose services we are extremely grateful and who serve us really well, are Joseph Archer of PKF Littlejohn LLP, the company's auditors, and whose offices we're holding this AGM. Richard Johnson of Arden Partners PLC, who are brokers to the company. Richie Barmer of Strand Hanson Limited, who are our nomads, nominated advisors to the company. Nicholas Heap of Bird & Bird, the company's legal advisors, and Tom Cooper of Walbrook Public Relations, the company's PR advisors. Now, as takes place before every AGM, an AGM update statement was made to the stock exchange at 7 a.m. this morning, and as usual, I will ask Peter Fowler, our Chief Executive, to present the statement. The directors will take any questions from you regarding the statement or any other matter at the end of the meeting. So, Peter, can I ask you to read out the statement that was made to the stock exchange?
Thank you, Tony. Good morning, everyone. The AGM statement is as follows. In our 2020 annual report issued on the 30th of April 2020, I was pleased to report that despite considerable challenges caused by the COVID-19 global pandemic, we kept all our people safe. We maintained our global operations, albeit some on reduced levels, and we delivered some notable successes. Our revenues held up well considering the unprecedented challenges, largely due to the strength of our multiple revenue stream business model and the early action taken by management. The global uncertainty and travel restrictions did of course impact our business by delaying the signing and or delivery of certain projects, such as the Palace of Westminster contract, which we secured in 2020, but which we were only able to commence operations in April 21. As noted in the company's 30th of April 21 announcement, these disruptions and delays continued into 21, with travel restrictions still in place in many parts of the world, resulting in further right shifting of certain expected contracts and revenues, which have impacted H1 21 financials. Despite this, we are pleased to reconfirm that with the expected easing of restrictions, the recently secured contracts, and a strong pipeline, we still believe we can meet full year expectations at the revenue and profit before tax level. Notwithstanding these challenges and the continuing global uncertainty, we remain excited about our future growth. We continue to pursue the many large-scale project opportunities we are developing around the world. There are encouraging signs that travel restrictions may at last be beginning to ease in a number of regions, and that some of our delayed projects may once again begin to move forward. In our 2020 annual report, we stated that one of our key goals for 21 was to secure at least one more long-term managed services contract. And in that respect, I'm delighted that with an easing of restrictions, we have not only been able to secure one, but two significant new long-term contract wins. In December 20, we announced we were at an advanced stage of securing a long-term contract for 5 airports in an African country. We had been pursuing this opportunity since our acquisition of the French business Euroops in 2019, and we expected to secure this contract in 2020. But due to the various lockdowns and travel restrictions in place, things were delayed. I was delighted, therefore, to be able to announce on the 15th of June that we had secured a 20-year managed services contract to provide security services to 5 airports in the DRC, Central Africa. This was a very significant achievement, and not only means we now have an established presence in a new region of Africa, but also the project offers substantial growth opportunities. In addition, on the 16th of June, I was delighted to announce that we had been awarded another long-term managed services contract to provide port screening services in West Africa. We have been pursuing and developing this opportunity for well over 2 years, and it is another important win for the company that further extends our footprint and profile in the port screening sector. Both of the important new contract wins above demonstrate, as we have stated on a number of occasions, that large-scale projects such as these do take time to develop and negotiate, and equally demonstrate that we have the skills and the resources required to successfully deliver on such opportunities. Together, these 2 new contracts alone will add, once fully operational, several £million step changes to our annual revenues, and together with our other managed services and recurring revenue contracts, underpin confidence in our future forecasts and growth. As previously advised, we have established Westminster Arabia in the Kingdom of Saudi Arabia, jointly with our partners Hazar International, but have been delayed from finalising licences due to travel restrictions. I am pleased to report, however, that with some easing of restrictions, we are now preparing to re-enter the Kingdom to finalise matters. This will be an important step in enabling us to formally bid on the many medium and large-scale opportunities we have been developing there. In the UK, our contract with the Palace of Westminster has now commenced and is going well, and we are already looking at possible extensions to this project. In addition to these important new contracts, we are encouraged by the recovery and growth from our existing operations. Our West African Airport Managed Services operation continues to be ahead of our expectations. It's currently 62% of pre-COVID levels, and although we do not expect to see a full recovery to pre-COVID levels until 2022, it is encouraging that this operation is recovering faster than average African and European airport traffic. Our port managed services operations in Ghana have not been materially affected by COVID-19 and continue to perform well. With a 4th berth due later in 21, we expect to see further growth in this important project. We continue to experience healthy inquiry levels, and so far in 21 have delivered products and services to over 40 countries around the world. And we are beginning to see encouraging signs of recovery in our guarding and training businesses with recent new contract awards. We continue to develop new opportunities and initiatives, such as our partnership with Certific in their new COVID testing program, for which Westminster are providing verification services. Whilst it remains too early to judge the potential scale and impact of this initiative, we are encouraged by the increasing interest Certific are receiving from their services, including from large-scale event organisers. As previously announced on the 28th of May 21, Mr. Charles Catania will be leaving the board today at the end of the annual general meeting. It is a pity he could not be with us in person today, but on behalf of the chairman and the rest of the board, I would like to thank him for his support and service to the company, and we wish him well for the future. We expect to update the market shortly on his replacement. Also, as previously announced on the 28th of May 21, our non-executive director, Mr. Mauli Ababio, was appointed as deputy chairman of the company. And I'm especially pleased to report that Mauli was recently honoured by being knighted by the French ambassador in Ghana on behalf of the President of France, Emmanuel Macron, at a ceremony held at the residence of France in Accra, Ghana, on the 17th of June 21. The ceremony was attended by a number of dignitaries, including the President of Ghana, and at which Mauli was presented with France's second highest award, the French National Order of Merit. On behalf of the board and all at Westminster, I would like to publicly congratulate him on this well-deserved award. In the last few years, we have achieved a lot, and it's rewarding to see that the quality of our services and the many achievements are being widely recognised. I'm extremely proud that in April 21, Westminster were granted the Queen's Award for Enterprise in recognition of outstanding achievements in international trade. The award ceremony and Westminster's Open Day will now take place at Westminster House on the 3rd of September 2021. In November 2020, the London Stock Exchange selected Westminster as one of 1,000 companies to inspire Britain. And in May 20 and again in April 21, the UK Civil Aviation Authority graded our aviation training businesses as outstanding in all areas. These are all important accolades for our business and a testament to the skill and hard work of all our people. Thank you, Tony.
Thank you, Peter. Thank you. So I will now start the formal proceedings of this annual general meeting. Notice of the meeting containing the resolutions set out in full, together with explanatory notes, was sent to shareholders on the 28th of May, and so the requisite notice of this meeting has been given, and I propose, therefore, that with your consent, the notice of this meeting be taken as read. Today, bear with us, the voting procedures will be conducted by poll, and given the limited attendance at the meeting, and in order to provide a more representative view of the voting by shareholders on the various resolutions. Accordingly, in accordance with the powers granted to me as chairman of the meeting under Article 57.1 of the Company's Articles of Association, I propose to demand a poll on each of the resolutions numbered 1 to 7. Accordingly, a poll card would have been given to those who entered the room, and the poll card has the resolutions numbered 1 to 7. After each resolution has been proposed, please complete your poll card. When all of the resolutions have been proposed and you've completed your poll card, they will be collected by the registrar, Mark Ray, who will calculate the results of each resolution. He will then pass the results to myself. I will then read out the results of each resolution. A proxy may exercise all or any of the appointing members' rights to attend, speak, and vote at this meeting by the poll. If more than one joint member is present, the vote of the senior shall be accepted. Seniority shall be determined by the order in which the names stand in the company's register of members, and only the senior member should vote. And to comply with best practice, I would like to inform members that the number of proxy votes for each resolution and item on the agenda to be considered today will be calculated by the company's registrars. So I'll now proceed by dealing with questions relating to each resolution immediately before that resolution is put to the meeting. But of course, those are questions only very specifically relating to the resolution. Whilst we're considering the formal business of the meeting, as I say, you'll have to restrict your questions to matters concerning the resolution under consideration only. And of course, as we've made clear earlier, once we've concluded the formal business of the meeting, there's going to be opportunity to put questions to the board on matters outside the formal business of the meeting. If you feel the need to ask any questions about the resolutions, please give your name, state whether you're a shareholder, proxy, or corporate representative. If you're a proxy or corporate representative, please state your name and the name of the shareholder you're representing. So, and questions, of course, may also be submitted today through the Investors Meet Company platform. So I will now formally propose the resolutions to the meeting. The full text of each of the resolutions is set out in the notice of meeting, a copy of which you have received. Resolutions 1, 2, 3, 4, and 5 are proposed as ordinary resolutions and require a simple majority to be passed. Resolutions 6 and 7 are proposed as special resolutions, which requires a majority of 75% to vote in favour to be passed. So coming to Resolution 1. Resolution 1 is to receive, adopt and approve the company's financial statements and the reports of the directors and auditors thereon for the year ended the 31st of December 2020. So before putting the resolution to the meeting, may I ask if there are any questions on the annual report and financial statements or the directors or auditors' reports? So as there are none, I now propose that the annual report and financial statements for the year ended 31st December 2020 together with the director's report and auditor's report thereon, be received. And as I stated earlier, this resolution will be conducted by way of a poll, and I would therefore ask you to please complete your poll card for resolution 1, and as soon as the registrar has those results, he will bring them to me.
Resolution to the end.
Sorry?
To the end.
You bring them at the end, sir.
You're going to bring them at the end, are you? The whole lot?
Yes.
Okay, fine. Well, that's very good. We'll rattle through then.
Otherwise, it'd be going off.
Well, I was looking forward to it. I thought, okay. Right, well, resolution 2 relates to me, so I'm going to pass the chair to Peter to deal with resolution 2.
Thank you, Tony. As Tony says, resolution 2 concerns the reappointment of the Right Honourable Sir Tony Baldry as a director. The Right Honourable Sir Tony Baldry is retiring in accordance with the company's Articles of Association, and being eligible offers himself for re-election at the annual general meeting. The board has recommended that Tony be reappointed as a director. And before putting the resolution, I shall be pleased to answer any questions you may have in relation to the re-election of Sir Tony. There being no questions, I now propose resolution 2, the reappointment of Sir Tony Baldry as a director of the company. As stated earlier by the chairman, this resolution will be conducted by way of a poll, and I would therefore ask that you please complete your poll card in resolution 2. I shall now pass the chair back to you, Sir Tony.
Okay, so thank you, Peter. I now resume the chair. As Peter's already mentioned from the AGM notice, Charles Catania is stepping down today as a non-executive director of the company due to other commitments. And as Peter said, can I also echo and repeat on behalf of the board and shareholders to thank Charles for his contribution to the company over the last 2.5 years. Resolution 3 proposes to reappoint PKF Littlejohn LLP as auditor of the company until the conclusion of the next annual general meeting at which the financial statements are laid before the company. Before putting the resolution, I'd be pleased to answer any questions you may have in relation to the reappointment of PFK Littlejohn LLP as company auditor. As there are none, I now propose resolution 3 to reappointment of PKF Littlejohn LLP as the company auditor. Again, this resolution will be conducted by way of a poll. I therefore ask you to please complete your poll card for resolution 3. Resolution 4 proposes the authorization of the directors to fix the remuneration of the auditors. Again, before putting this resolution, I should be pleased to answer any questions. As there are none, I now propose resolution 4, the authorization of the directors to fix the remuneration of the auditors. Again, this will be conducted by way of a poll. Again, please complete your poll card for resolution 4. Resolution 5 proposes to authorize the directors to allot relevant securities. Again, any questions? No. I now propose resolution 5 to authorize the directors to allot relevant securities. Whilst this is deemed to be special business, this resolution is actually an ordinary resolution requiring only a 50% plus majority. Again, conducted by way of a poll, so please complete your poll card for resolution 5. Resolution 6 proposes to disapply the statutory preemption rights under the Companies Act 2006. Again, if anyone has any questions, no. Right, I now propose resolution 6 to disapply the statutory preemption rights under the Companies Act 2006. This is a special resolution, so 75% majority will be required. And again, please complete your poll card for resolution 6. Resolution 7 proposes to approve the capital reduction by way of a cancellation of the company's deferred shares, the amount standing to the credit of the company's share premium account, and the capital reduction shares created pursuant to the capitalization of the company's merger reserve. And again, before putting this resolution, I should be pleased to answer any questions you may have on the capital reduction by way of a cancellation of the company's deferred shares, the amount standing to the credit of the company's share premium account, and the capital reduction shares created pursuant to the capitalization of the company's merger reserve. As there are no questions, I now propose resolution 7 to approve the capital reduction by way of a cancellation of the company's deferred shares, the amount standing to the credit of the company's share premium account, and the capital reduction shares created pursuant to the capitalization of the company's merger reserve. This is a special resolution. A 75% majority will be required. As I stated earlier on, this resolution will be conducted by way of a poll. Therefore, please complete your poll card. And our registrar, Mark Ray, will now collect the poll cards, calculate the results of the polls, Once completed, he will pass the results to me, and there will be a short pause in the meeting whilst he, as returning officer, declares the number of votes cast. Okay.
A couple of minutes, did you? That's just the results on the screen there. That helps.
Thank you.
I can write them out after.
Thank you.
Okay. So, Resolution 1.4 was 50,541,273 votes for, which is 99.97%, against 13,302 votes, which is 0.03%, and withheld 110,000. Resolution 2 for 44,700,843 and against 5,853,632 and withheld 110,884. Resolution 3 in favour 50,125,773 against 291,702, withheld or abstained 247,884. Resolution 4 in favour 50,249,945 votes against 291,702 and abstained 123,702. Resolution 5 in favour 46,123,377 against 4,412,270 votes, abstained 123,712. Resolution 6 in favour 49,428,502 against 1,106,145 and abstained 130,712. And resolution 7 in favour 50,306,558 against 247,089 and abstained 111,712. So, I mean, just for the avoidance of doubt, the percentages in favour of the resolutions, a percentage in favour of resolution 1 was 99.97, in favour of resolution 2 is 88.42%, resolution 3 99.42%, resolution 4 99.42%, resolution 5 91.27%, resolution 6 97.81%, and resolution 7 99.51%. So I declare all the resolutions carried by the necessary majorities, and I will give the thank you very much back to the registrar. So that completes the formal part of the meeting. But as I mentioned, this AGM is being held live on the Investor Meets company platform to allow those shareholders who could not attend today an opportunity to watch and hear the proceedings and to ask questions. Now, we've had a number of questions submitted on the platform in advance of the meeting, which we'll deal with first, and I'll then take questions from the room because they'll then have the benefit.
Who didn't turn their phone off?
They'll then have the benefit of having heard the answers. And in any event, all questions and answers, including any we've not had time to deal with today, will be posted after the event on the Investor Meets company website. And actually, I'll be quite interested, I'm sure we'll be interested to have shareholders' feedback as to whether they find the Investor Meet platform, this process, useful for us to do in future years. Now, a number of questions have a similar theme, and so we're going to group those, sensibly going to group those questions so that they can be answered together, and I'll obviously ask the appropriate members of the board to answer the questions. So most of them will be answered by Peter, but of course financial questions will be answered by Mark from his room where he is present in quarantine. So we start with several questions regarding the COVID testing initiative we're involved in. Question one, at the last investor meet, you were excited about the partnership with Certific and the potential for income from this. Can you say something about the level of income you are receiving from this service? And is Certific producing meaningful income? I see their tests are always sold out. And so what's our cut or expected income this year? This isn't price sensitive like with security contracts, and so hopefully you can release this. And can you explain what WSG, Westminster Security Group, do in the partnership with Certific? I see we do not handle any of the tests or are involved in any way with the processing of data, as we're not shown on the list of data users on the Certific website. I'd just like to understand what we are doing and the income potential. So, Peter.
Thank you, Tony. Okay, so I understand that there is interest in the Certific program. It is one of many initiatives that we undertake. As I said in the AGM, it is too early really to judge on the real quantum or scope of this project. It's not going to be a DRC size contract, so clearly it's just one of our many revenue streams that we have as a business. And frankly, having multiple revenue streams has been a strength for the business, as you've seen through COVID. Clearly, I cannot. The question talks about price sensitive and so forth. There's commercial sensitivity too, and remember, there's other organisations involved in this, so it wouldn't be right for me to give out too much commercial information. What I can tell you is the revenue to date is in six figures, so it's not de minimis. It's a useful addition to our revenue stream. In terms of what we do, we're providing verification services. So one of the problems with COVID testing is how do you know it's been done properly if it's not done at a centre? So if you're doing it at home, how do you know it's you that's done it? Or how do the authorities know it's you that's done it? Or have you done it properly? Did you put it up the nose and twiddle it properly and all the rest of it? So what Certific have, and it's quite interesting, is a verified service that you can do at home, and we provide the verification. So it's quite a clever platform. If you think of our teams as being like X-ray screeners, so instead of watching the screens and understanding and doing the analysis of X-rays, we're doing that for is the test being carried out properly and so forth. So we're providing the verification service. We're not involved in selling the test. We're not involved in the analysis at the end of the test. Ours is the verification service, and very much akin, as I say, to what we already do in terms of X-ray screening. So I think that's about as much as I can say with that. But it's a useful project.
Yeah. It's a very straightforward test, and I having needed to use it on myself, having come back from a business visit and having to self-isolate for a while, I'd commend it to any business user. It's a very straightforward and useful test for business people. So we now have a few questions around recent contract awards. The recent announcement of the managed airport contract in the DRC is great news. Can you give an estimate of the cost of funding the upgrade of the security infrastructure, installing new security equipment and fencing in all 5 airports? And do you have the estimated departing passenger numbers from DRC international airports, i.e. the ones covered by our managed service contract? Peter.
Yes, well, I'm sure all shareholders will agree with me. It is an absolutely fantastic contract win for the company. A 20-year contract. It's very significant. Potentially, I mean, we're looking into the future now, so who knows? But potentially north of $500 million of contracts. So it's a very substantial project. You'll have seen what we put in our RNS as an estimate of the first year's revenue stream. We're basing that on passenger numbers being around 50% of what they would be pre-COVID. That's a bit of an estimation at the moment, but I think we'll be pretty accurate on that. I have to say we've been quite conservative with that number. Obviously, in the startup phase, you never quite know whether everything's going to fall in place exactly when you want it to. So we have been conservative on that number. In terms of passenger numbers, I'm sure if you do digging around, you'll work out and find out that there's pre-COVID, so back in 2019, there were about 1.1 million embarking passengers. What's a really important point to make here is the scalability of our business. So we have pretty well fixed operating costs. So it costs us no more to run an airport with 500,000 embarking passengers than it does for 1 million embarking passengers. So what's really important to bear in mind is if we start an operation at a profitable level, which we are now, and as passenger numbers come back, and remember I said we're working on about 50% at the moment, as they come back over the next year or so, we're anticipating getting back to pre-COVID in 23 with this particular operation, and grow over 20 years, which we will see passenger growth. You can see that a lot of the additional revenue from that passenger growth drops to the bottom line as profitability. So you can see how important contracts like this are to the future growth of the business. Regarding the investment, there will be constant investment through the life of the project, and I know that's not really what the question's talking about, but it's important to understand that the way these contracts work is we're running them for a period, 10 or 20 years, whatever they are, and our contract is to continually upgrade that security to keep it top notch throughout the term of the agreement. In terms of upfront investment, with what our current resources were and the recent fundraising we've already done, we're already well funded to take off. These projects, incidentally, they take 2, 3, possibly even longer to put everything in place. We're building fences and perimeter roads and all sorts of things. So a lot of the investment will be coming from the revenue stream down the line. So are we well funded for our startup phase? Absolutely. We're funded through to where we see revenue starting to take over from investment. So fantastic. I can't endorse it enough to our shareholders. Fantastic contract win.
So now some questions on financing and recent contracts. Income from the newly won contracts will not start for many months. They may also require funding from external sources. Can you say what actions the company is taking to preserve cash until you reach a point of positive cash flow so that the need for external funding is reduced? The market response to our managed service contracts was relatively mute given the magnitude of the news. I think this is down to 2 factors which require clarification. How profitable are these contracts to us in terms of numbers and margins? And secondly, funding will be required to fully roll these out, and the market seemed cautious given historical share placement which have damaged the share price, particularly with regard to discount and dilution. And can you confirm non-dilutive funding options for working capital following recent contracts? Peter.
Okay, so I'll let Mark in a moment take some of the financing part of that question, but first of all, just pick up the question on a muted response. And if the question is referring to the share price didn't rise where we would all hope it would do, then I totally agree with that. I think there's a long way to go to reflect the value of that contract in our in our business, and I think that will happen. However, I think it's important to just point out just how liquid our stock is. You know, in 4 days last week, we saw 170 million shares traded. That's 60% or more of our entire shares in issue. And we know the majority of our shareholders, we see the register, do not trade their shares. So what we are seeing is phenomenal trading by short-term traders, the same stock going round and round and round, and that does have an effect on our price. And that's one of the reasons that it's really important that we are building an institutional holding, and I'm very pleased with the way that is now building. We have some valued institutional holders now in our stock, and you've seen that growing over the last week or two. And I suspect that will continue. So as we get more institutional backing in our company, as we grow, then I think some of this volatility might come out, and I think we'll see more value in our share price. That's my little rant on the share price, and I'm sure a lot of shareholders agree with me on that. Mark, could you pick up if you're still awake on
the ready to go
on the financing part of that?
Okay. Well, first of all, let's talk about the commencement of revenues. We actually think that the Liberia revenues will start in about 2 months, and the DRC in approximately 3 months. And in doing the placing, the cash needs have been very carefully considered, and it's been taken into account in those projections. We're continuing to run a tight ship. We're now in a growth phase, of course, but we expect to add minimal costs centrally in delivering these, and we've got others in the pipeline which will add minimal costs as well. In answer to how profitable are these contracts, typically managed services projects have gross margins in excess of 50%. Remember, we're operationally geared, so all the central administration is not expected to change materially, and our house broker, Arden, also publishes research, and you can register for access through the link on the investor section of our website to give you a feel for the numbers. The funding we have recently raised was driven by institutional demand. And by completing this, we believe we've given the share price the opportunity to rise, we hope, less hindered by the overhang of the future funding needs. There was a question there about dilution. We certainly look at the various non-dilutive funding options for the future projects, and that includes bank debt, UK export finance support, leasing, etc. And as we're getting a bit bigger, these options are now becoming more viable. I am pleased to say that we've now moved to some very supportive bankers. Back to you, Tony.
Okay, well, actually, Mark, the next 2 questions are for you, and they are technical questions on the accounts. Under note 26 of the annual report, you describe a contingent liability of £0.936 million relating to a sundry debt, which is a legacy from the Riverfort EPSA. This is contingent on the share price and has to be settled to the accounts by the 31st of December of this year. Even though the recent news has raised the share price, it is still significantly lower than the price needed to eliminate the loss from this arrangement. Can you tell us how many of the 14 million shares have been sold to date, and what is your most recent valuation of the likely losses on this debt? And relating to the sundry debt under note 26, now that we are nearly halfway through the reporting year and the share price is still below the price needed to eliminate the loss, will you be placing a fair valuation on the likely losses from this arrangement, or continue to hold it on the accounts as a contingent liability? Mark.
Okay, given the view of our prospects, we halted the share sales under this arrangement very early in the year. So the share position at the moment is not materially different to the position as at the end of 2020. I'd like to refer you to the note which said, however, the shares do not have to be fully sold until at least 31 December 2021, and there is reason to believe that it will be at a high price higher during 2021 than the 31 December 2020 price level, and enough to recoup the losses. And I've got no reason to change my view from what I said at the year end. The important point, of course, is that having paid off the debt at the year end, those shares are effectively held to our order. And whilst we would like to get this completed in 2020, we want to avoid crystallising any loss if we can. Thanks very much, Tony.
Okay. So another question regarding our recent contract wins. A few years ago at an AGM, you were specifically asked whether existing shareholders would have their rights diluted if the vote to disapply preemption rights on any new share issue was carried, which it was. You assured me that this would never happen, but at the end of 2020, a large share issue took place at 4p, specifically excluding existing shareholders who, like me, had their shareholdings substantially diluted. Why was this share issue not available to existing shareholders, especially since websites such as Primary Bid exist precisely for this purpose? Peter.
Okay, so I do recall the conversation, and I have to say I didn't say it would never happen, because you couldn't say that. You know, there's always occasions when you can't do that. What I did say, and I still believe today, is that we would like PIs to be able to participate by using facilities such as Primary Bid. The last couple of raises we did, it wasn't really practical to do that, but quite frankly, shareholders could have bought in the market at the same price, even cheaper than the placees. So they haven't really been, from that perspective, disadvantaged. But I take the point, and where possible and where it's practical, if we, I hope we don't have to do too many more fundraisings unless we got a major acquisition or a huge contract which everybody can participate in. But I do take the point that if we can, it's good to give everybody a shot at it.
I've got a couple of questions on the impact of recent contract wins and their relationship to profitability, always a very important consideration, and these are for Mark. Do you know to what extent the two new contracts signed in the Democratic Republic of Congo and Liberia will impact your EBITDA? Will it be a negative impact in FY 2021 and afterwards positive? And with your profit margin being so low, are there opportunities for improvement in this area in the near future? Mark.
Okay, well, let's take the DRC and Liberia contracts first. These are expected to make a positive contribution in the 2021 results and, of course, going forward. Now, turning to our margins, actually, our profit margins are not low. Most managed service contracts yield greater than 50% margin, as I said in the earlier question. Why the questioner might be perceiving a low margin is that we have a fixed overhead, which is currently keeping the overall net margin low. However, as Peter has already said, we're operationally geared. As each new managed service contracts for DRC, Liberia and others in the pipeline comes on stream, virtually all of that 50% plus high margin profit will then drop to the bottom line, and the net margin is expected to improve considerably. Thanks, Tony.
Okay, and so I've got a couple of questions on the potential for further managed service contracts. With regards to the MOU with Burkina Faso, it mentions the international airports. There are 27 airports in the country. How many are covered by the MOU? Also, are you hoping for this to be converted this year, or is it a longer term prospect? And fantastic managed service contract wins in the last week or so. Is there an expectation of more managed service contract wins this year? Peter.
Thank you, Tony. Okay, so first of all, let me just sort of remind everybody that we no longer, as a rule, talk about or announce or put into the public domain that we've signed MOUs. There's others that we've got bubbling around that we haven't announced. And that's a very deliberate policy because there's no certainty of them and these things take a long time, as everybody knows. The reason that this one's in the public domain is the government themselves announced it in Burkina Faso. So personally, I take that as quite a positive indication, but that's why it's in the public domain, first of all. Secondly, to clarify your question, it relates to 2 international airports in Burkina Faso. There are 27, but there's in DRC, as an example, there's 54 airports. Not all of these airports and in the 2 countries and others, of course, are sizable. Some are quite small, but over a period of time, even small airports can grow. But I think what that does indicate to our investors is there is significant growth opportunities, both in the DRC and in Burkina Faso, should it become a contract. In terms of, are we going to convert it this year, and are there any others that we're going to win this year? I think we've done pretty well to get 2 already, by the way. I'm hoping everybody's happy with 2. If we can get 3, fantastic. I think we all know, don't we, that these things do take time. It's almost impossible to call certainty on any of this. There's all sorts of things that come into affect timing. We have good momentum with Burkina Faso. There's a good chance that we will see it this year. I couldn't possibly promise it. And there's others, that are bubbling along. Remember when we did a fundraising in December, we announced, or we had in the document, a list of 10 examples of projects that we're working on. 2 of those have now come in, so that's really sort of proving the point that these things do come in. Both of those, remember, took several years to get to the finishing line. So, will Burkina Faso happen this year? I hope so. It could do, but I'm not promising it. Could others? Absolutely. We're working really hard. If I can get 3 this year, I do hope that all of the shareholders will be smiling, not just most of them. Thank you.
Okay, a couple of country-specific questions. Can we have an update on Saudi opportunities?
Okay, so as I said in the Agm statement, Saudi, we formed the company, it's there, but there are certain licenses, banking licenses and other things that we have to have in place before we can actually enter into contracts. And our country manager has been locked out of the country for several months. He's not been able to get back in because of their own restrictions. That is lifting. We are hopeful that we'll have him in country in the next few weeks. We can then conclude all of that. But in the meantime, in the background, absolutely, of course, there's all sorts of discussions and things been going on, medium and large scale opportunities. And I think Saudi Arabia will be a very significant part of our business going forward. There's some very sizable projects there. Again, nobody can promise any of it, but I think we wouldn't be pursuing it, and neither would our partners, by the way, who, if you've looked them up, are very significant partners, unless we all thought there was real significant business to pursue. So I do hope to give investors more news on Saudi Arabia in a few months' time.
And on Iran, if Iran goes back into the JCPOA, would there be an Iran deal back on the cards? And if so, how long would it take to resurrect our deal?
Okay, so I mean, Iran's another really interesting prospect, isn't it? And everybody knows that, well, most people, I think, that we signed a contract, before Mr. Trump then pulled the plug on JCPOA, and we had to put that contract on hold. Of course, we're continuing to monitor the sort of regional and political situations, particularly the talks between the US and Iran, which there's a lot of, encouraging mood music coming out of that discussions. If they come to an accord, and if a new form of JCPOA is put in place, and in particular if banking sanctions and so forth are removed, then I think we're in a very good place to take advantage of that. The contract we have just needs an exchange of letters from the boards to re-trigger it. But there's all sorts of nuances going on. There's been an election in Iran, as you probably know. There's a more hardline president come in. So, there's all sorts of political things that we need to be aware of. But if we can, we certainly will pursue it. The opportunities there are enormous. So dwarfing anything else we've already talked about. But, we continue to monitor it. We continue to work with the British Embassy out there very closely. We do work with our interlocutors. We do work with the airport authorities. We are in discussion. So it's all to play for.
And I think the Westminster Group must be one of the very few UK companies that has commercial interests in both Saudi Arabia and Iran. So here's a blast from the past for Mark. Has the Sierra Queen ferry now been fully bought and paid for? Mark,
And as it's historic, I'm going to give you a historic quote from the RNS we put out on the 19th of December 2019, in which we said the vessel has been sold for a total of consideration of $643,000 payable by 40,000 deposit and the balance by 36 equal monthly installments. So the answer to the question is yes, it's been sold, but no, it hasn't been paid for, because we said at the start it's being sold on extended terms.
Okay. Then sticking with Sierra Leone, have we heard any more about the new terminal at Lungi and WSG providing security for that? Peter?
Okay, so no is the answer. Currently, there's no new terminal underway. Personally, I'll be quite surprised if one ever starts in the near future. The existing terminal is not that old. It's got significant capacity, and those that have followed the Sierra Leone landscape will know that other new airports were talked about at one stage, and a bridge was talked about at one stage, and these various projects never actually come off. A terminal may be built one day, who knows? I don't see it in the foreseeable future, but if it does, our contract, which still has a number of years to run, covers any new airport and any new terminal in the country. So should a new terminal be constructed, then Westminster are the company that will provide the security to it. Okay,
and then a question from Mark. Will Arden be updating their broker note given the two managed service contracts, which presumably you see as transformational? Mark?
And yes, and my answer to that is Arden have already updated their brokers' notes, and there were two separate updates following the announcement on each project. These were issued on 15th of June and the 16th of June. And in answer to the last question, yes, we see these projects as really transformational for the group. Thanks so much, Tony.
Okay, order. So that concludes the questions we had on the platform. So I'm now going to come to the shareholders in the room. And what I think I'll do, just in terms of good order, if I may, is I'm going to start from my left going down to the right and just ask you one by one whether you have any questions you'd like to put to the board. Is that okay? So that, we don't all try and compete and, so disorderly. So do you have any questions you'd like to put to the board?
No, everything's been answered.
Thank you very much. Do you have any questions you'd like to put to the board?
Yeah, I do have one.
Yeah.
I knew Robin would have one.
So your managed service contracts are largely with government bodies. They're very long term. They take you several years to negotiate. They also give you great visibility on earnings over that period. So given all of this, why haven't you been able to attract or win debt funding from UK, African or EU development banks? Have you tried to do this? Why haven't you managed to achieve it?
Okay, can I paraphrase that, Robin, just so for the benefit of the sound people?
People on the platform.
People on the platform, yeah. So Robin's question is, why haven't we been able to attract or win money from organizations like the African Development Bank, other institutions such as the EU, for funding managed service contracts in Africa, which are with governments supported by IATA and high profile? Mark, would you like to answer that?
Well, we obviously are looking for funds all around, but the first of any funding, even if it's UKEF, it has to be that you have to have a supportive bank. And until recently, we have not had a supportive bank there. The other problem that you have is that if you want to, say, lease things with a bank, you've got equipment going into places where leasing companies do not like to have their equipment, which is why it has not been an attractive bankable proposition at the moment. But now we're getting bigger. We feel that we should be able to do some more of non-dilutive funding compared to having to go out for raises. I don't know if you want to say any more, Peter.
Yeah, I just sort of pick up on your last point, Mark, really. Robin, it's a function of the size and the success of the business. So up to now, it's been more difficult to show. I mean, it's only this month, isn't it, that we've seen 2 new significant contracts come on. We had Sierra Leone and we recently had Ghana. I think we've now got to a bit of critical mass and a credibility point, if you like, to have more success with African bank financing of that sort. So I think going forward, much more options are opening up for us than were. Believe me, we've trawled around all sorts of ways of raising capital, and it's tough. It's tough down there when it's when you don't have that size and credibility.
Thanks.
Do you have any questions?
Yes, I do.
Yeah.
First one is, I did actually ask this question online, but didn't receive an answer. It didn't get to me. As I suggested, the AGM be held in Banbury, because it's been held there before under a marquee, got plenty of land, and it would have saved last-minute changes, whatever happened foreseeable at the time. So I wanted to know why you didn't consider having the AGM there.
Okay. Malcolm, sorry, I didn't see that on the platform, so I apologise, but happy to answer it now. Our plans were made for this AGM a year ago, and this was all put into place. We weren't sure where we were going to be with COVID and everything else, so we booked these. I mean, I agree with you. It's quite a trek for us, to be honest, to come here as well. What I can tell you is next year the plan is we are holding it in Banbury, Banbury Towers, as I think some people call it, and marquee. Everybody's welcome, and it'll be held there.
That was a good one when we had the one there. It was a very good show. When we went before.
And we'll try. Look, we've got an open day on the 3rd of September when we're doing the Queen's Award, and we're going to have all sorts of demonstrations. And if you went to the AGM we had some years back, we did a similar sort of thing, and I quite like that because it'd be nice for investors like yourselves to see some of the stuff that we do. So we are planning that now for next year.
And the drinks afterwards.
And absolutely, yeah.
I was surprised because a year ago you didn't know the COVID restrictions, so I'm surprised you didn't book up that one then.
Well, it was a decision made at the time not to. So
there's always the point. Sorry, there's always the point. There's always a point as well that normally we do trail up quite a number of advisors up to the AGM, lawyers and that, and it's easier for many of the advisors and quite a lot of shareholders for it to be in London. But if the demand is for Banbury, well, then that's what we'll do.
It was well supported, very well.
Yeah, well,
yeah. Okay, and I mean the whole purpose of this is to hold in AGMs to the convenience of shareholders. That's the point about AGMs.
I recall there's more shareholders at that meeting than any other meeting I've been to.
Yeah. Well, next year we'll be there.
Okay.
My second question is, why did you participate in the 4p rise to give encouragement to investments you're putting something
In the December raise?
The 4p, yes.
Yeah, we were precluded from doing so.
So are you planning now to make a meaningful investment in the board?
When we're not inside.
Part of the problem, because of, as you've seen, these, we can be in negotiations on some of these managed service contracts for some time. So we know they're coming, they're coming up. And so for a very large amount of the time, we are insiders. So it does make life quite difficult in terms of investing.
I do appreciate that, but normally in companies I've invested in such a place as that, heavily discounting, the board's normally taking advantage of taking that up.
Malcolm, the whole board was going to
Right.
participate in the December raise. We were precluded from doing so on the advice of our nomads and brokers. So because we knew where we were, let's be honest, we knew where this 5 airport project was. Now, it could have come in January. We was expecting it that imminently. It's taken, it's the nature of the beast really, but it took a few more months to come in.
So you stated,
And we would have liked to have participated in the last one, but we are still inside on other stuff now. I don't want to say too much because that then gives an indication that there's something around the corner. But, as Tony said, we're very off. But we are putting plans in place to have, a means of investing as the board on a continuous basis that sort of bypasses the inside. There are plans and we are working on that.
which will make sense, because if we see board members invest in this company, I think that would change sentiment.
Yeah.
Entirely.
Well, I do recall when we last bought some, a year or so ago, the share price went down. But I take the point, and believe me, we all believe this share price is going to be a lot higher than it is. We know what's coming down the line, so we want to have a stake in that too.
I appreciate your buy back then, but it wasn't. It is more meaningful than it might have been.
Yeah.
Got one more, I think. The airport contract. I presume there's brakes put into this, as there are in Sierra Leone.
There's not.
There's no brakes. Not 7-year brakes. Surprise, but welcome. Right, thank you.
No, it goes for 20 years.
Heaven's sake. No. Sorry. I'm chairing this meeting. Okay. Mark, do you have a comment on the last question?
Yeah, there were no break clauses. It's a 20-year contract with an option for a further 5.
Thank you. Right. Robin.
On the issue of directors buying stock, 3 years ago at an AGM, I suggested to the board that you set in place a monthly share buying scheme, automatic, all in place, so you're not inside. You said you'd consider it, you said you'd talk about it. 3 years later, you're now suggesting that you're talking about it.
No, it's not quite fair, Robin. And your point's well made. And we did go and see Bird & Bird, the lawyers, and talk about how the scheme would be put in place. Over the last 18 months or so, we've been a little bit busy, to say the least, trying to keep the business going, and did a good job of that, I think, really. We've now re-engaged with Bird & Bird on what it was we talked about, 2 years ago. So it might have taken a bit of time, but it is putting in place. We haven't just started. We're picking up on what we were doing before.
So timelines?
I hope shortly.
Months, not years.
Yeah, shortly. Yeah. Okay, so thank you very much for all your questions. And can I thank everyone for their interest? Can I thank those shareholders?
We need to ask Tom if there's any questions online.
Tom, have you got any further questions?
Tony, the majority of questions on the platform have in fact been answered during the course of the presentation, and I would just note Andrew M, Gary R, and Jonathan B, your questions around the contracts themselves, expectation of timing of revenue. I would suggest you've had a pretty comprehensive response on that. Peter H, if we can direct you to the Arden research notes, please, on forecasts. That's the better source for that. Christopher T, you've had an answer on Saudi. Gary R on Iran. There is one question we haven't yet addressed, which you might be able to add some colour to, from Peter H, which is when you might expect the DRC government to ratify the contract, and that's the close from our end.
Okay, so just so I can explain what the ratification process is. In the DRC, in many countries actually, they have a process where a large contract being signed by a government body like an airport authority has to be ticked off, if you like, to make sure that the managing director of that airport isn't placing a large contract with his brother or something for a sort of corruption angle. So it's not really an evaluation of our contract, is to make sure the processes have been followed properly. So it's a procedure rather than anything else. bearing in mind our contract is very high profile. It's been in all the press out there. It's supported by the presidency, the ministry, the Civil Aviation Authority, and so forth. We don't perceive any issues. In terms of timing, I'm always loath to give timing because whenever I say it, it's never what I think it's going to be. We're talking, days, weeks, and certainly not months. We're hoping it's a fairly quick process. We're not waiting for it. We're starting to put various things in place for the project. Obviously, we do need the ratification to happen, but we suspect it will be fairly quick.
And I think it's significant that at the contract signing, it was the airport authority and the president's office who wanted there to be publicity and the press to be there to report it. So it was very openly publicised, not by us, but by the government of the DRC.
And remember, the British ambassador was present at the signing and actually is a signature on the contract. So that gives you an indication how above board this contract was. So I don't perceive any issues.
Okay, so that's wonderful technology with questions coming in all directions. It's a bit like the House of Commons, really. Okay, so thank you all very much. The results of this meeting will be announced to the markets through our regulatory information service posted on our website as soon as is practicable. I'm really, really sorry that because of COVID restrictions and social distancing restrictions, we can't invite anyone to join us for refreshments. But as Peter's explained, two things. Firstly, on September the 3rd, we're having the Queen's Award presented to us by the Lord Lieutenant, on behalf of the Queen, by the Lord Lieutenant of Oxfordshire, Sir Tim Stevens, KCVO, at Westminster House. And I suspect for catering purposes, if any, I think we welcome any shareholder, but if any shareholder wants to attend, I think it'd be just helpful if they let us know for catering purposes, but we'd be delighted to see them. And then next year's AGM, we will hold in Banbury. And as Mark said, there's a balance here to be struck between, what works for what works for shareholders. So we'll certainly try Banbury next year, and then get people's kind of feedback as to whether they prefer that to having a London location. So that, I think, concludes the AGM. Order.
Thank you, everybody.
Thank you.